All right, we are back. Mitchell Report Unleashed podcast. And a conversation of this magnitude requires an expert in the field when we're talking money, business, finance, real estate. My friend Lane, how's it going?
Good, good. Thanks for having me, Rory. Aloha, everybody.
Yes, sir. Yes, sir. So, finances and money. Let me ask you this question. And I know it's a very cliche question to ask. What's the importance of money?
Well, it means something for different people. I mean, for me, I think money is pretty important, right? Money is what it means to me is it gives you freedom to do what you want, where you want, with whom you want, and then on your timetable too. Um, that's maybe I think back to my parents were pretty controlling, and they paid the bill and they called the shots. So that was the framework I grew up on, and he who holds the dollar holds the power.
That is true. That is true. So and the reason why I asked that question is because we look at the current state right now when it comes down to money. I'm over here in Canada. We've got tariffs. We've got all these different things going on. And folks of my caliber, could be other content creators, up and coming entrepreneurs, business owners, don't really know how to balance between what's going on in the market right now and spinning it into like real life and savings and opening and starting a business. Walk through a three-step process that you could help somebody out today with.
Yeah, you're entirely right. I mean, I hang out in business owner circles. Be a great operator, but horrible investor and tax strategist. So it's not a carryover. We work with people who are, on that kind of that last piece, the investing side, the mindset side on that. But one, two, three piece. First, I am always a believer that you can't really make money from investing unless you got it. They always talk about percent return on investment. Well, if you don't have jack to invest, then you're not going to really get anything out of it. So that's the first thing. The second thing is to choose prudent investments. Now, you could invest in like alternative coins that skyrocket and go to the moon, but typically it's comboed with the risk side of there. There's a concept out there called the Sharpe ratio, where there's an equal component of risk to reward. There's sort of like a linear relationship on that. And I guess the third piece is that not a lot of people get to, which is like people in relationships, because we like to focus on alternative investments off the beaten path, so off of Wall Street, off of the traditional investments that are mainly for retail investors, right? We like to go directly to the source, cut out the middleman, and capture those returns and put it in our pocket, as opposed to it goes to the big buildings on Wall Street or your local bank or these institutions.
Oh, I love that you say that. So let me ask you this question. Getting your first start in your business and your expertise and things like that, what did that look like for yourself? And speak
So
to
I
speak to
I
a
went
place that
down the path of being a passive investor. Like, so my story, I graduated with the engineering degree and just started to work for the man. Made a decent salary. I think thing with engineers, you're never going to go hungry with that. You're not going to get super wealthy, but it allowed me, like going back to that step one piece, it got me some money to save up. Took me a few years to buy a down payment for a house in Seattle, Washington, and I was off and rolling. And I just started to rent that thing out and started to learn about rent to value ratios, underwriting deals. I kind of, got it going before I really started to, learn more about it. So that's kind of how I got started, and this continued on for many, many years as I was working my day job on the side.
So when you speak about working the day job, working for the man, right? Speak to the ones that are wanting to have that vision, maybe getting into real estate, investing, things like that. What is the first thing they got to look at as far as percentage that they can go start investing slowly? And then the second part is making that full transition. What does that look like for that process?
Yeah, I mean, maybe I'll start with, like, there's a lot of people out there that suppose say you can start with no money down. Not really possible, guys. Like, that's stupid. Um, I mean, a lot of these guys will just sell courses for like antiquated information on when you could do that back in the day. But even if you could, that's a full-time job. So there's a sort of a dividing mark. You know, if you make more than 50, 60 grand per year at a day job, then I wouldn't even waste my time doing that type of stuff. If you're less, then don't listen to a thing I'm saying, guys. I'm not the guy to follow, right? Mainly we work with guys who have professional jobs or already successful businesses, and you have a component, you have a value to your time at that point already, as opposed to being unestablished. So, you know, most times you need 20% down payment to buy a house. So if you're looking at $100,000 house, 20 grand, 25 grand, be nice. Um, not a huge amount of money, but nothing to shake a stick at, right?
No, for sure. Because I think here's my thing is we get caught up into the entrepreneur journey. And I think a lot of folks are like, oh, well, look, this person that has, $50 million dollars in the bank, they showed it is so easy to do. But I like how you say, and you bring it back where you're like, don't necessarily listen to me if you're in a certain tax bracket. You know what I mean? And I think more times than none, folks, they overstep past their means. Like myself, I work a 9 to 5, but I'm smart enough not to simply sit here and say, I'm going to go all in. You can't just go all in all the time. You got to think strategically. What's the current market for housing? You have to still pay for food on the table. You know what I mean? And it was so funny prior to this. I was in the gym. I was listening to a piece, and the gentleman was like, "You see all these folks taking this leap of faith that they want to go full out content creator, but they're in here making videos in the car. It tells you that it's like, well, what's your current living condition? You know what I mean? Are you couch surfing with somebody, family or friend? So it's like I think some folks need to understand, live within those means before you actually go make that complete ultimate leap, and then you put yourself into like a worse situation. You know what I mean?
Yeah, yeah. I mean, I generally think the same thing as you, right? I mean, go and create value and get it going on the side of something that is a little bit more time tested, like a day job where you trade your time for money. You may not like it, but hey, I did that for like a decade. So, I mean, even the best of us did it too, right? I guess is what I'm saying.
Exactly right.
But yeah, but on the other hand, I get the whole like mindset of it all, right? Like it's the whole hustle culture, which I think is great when you're getting started, right? The burn the boats. I'm gonna go all in. I'm gonna commit. Yeah, at least I think what's cool about that is at least you commit to something. Very you know minority of people do that in this world, right? But I mean, like, let's be smart about this, guys. You got to pay your rent. You got to put food on the table. And if you're going to go all in on something, then that's maybe not the smartest thing to do. And then also strategically, on content creation or a lot of things, you need to build up a skill set, and you're going to need a lot of repetition. So you're going to need like this time component. Now, I'm not saying you need necessarily 10,000 hours, as Malcolm Gladwell says, but you're going to need a good portion of that time. So you're going to need a longer runway. So this needs to be a longer sustained effort than just, I'm going to go all in and in a month I'm going to pop a viral video. No, that's not how it works. So yes, this is from a skill set type too. But anything that was anything took a long time to get going. I mean, I started my podcast just haphazardly in 2016. It wasn't until 2 years later that it got any bit of traction um, going. But the big thing there, it was the right place at the right time. I had started my podcast when 2021, 2020 was when everybody, their mother jumped in during the pandemic because they had nothing better to do, and it just podcasts are kind of a difficult place to get started these days. So it's a right place, right time too. And, I think a lot of times people may look a little bit too much at the exceptions, like the successful people. And look, this guy was recording in his car, right? And I think the uneducated economist comes to mind, right? But he's not doing so hot these days either, Like, look at his view count. He took like a month off. Things change, the algorithm changes, and if you don't constantly change what you put out there, it's not going to work. But just talking to the guy getting started, it's what other people did to get started isn't necessarily what you're going to get you going either.
And that's true. That's extreme value right there. Too many times, and I see people make car videos all the time, but I'm speaking to the ones that you just see like, oh, I'm a content creator now, and I just turn on my camera and the phone, and it's like, okay, cool, do that, but it's like, be mindful. I know a couple of friends that are in the video game world, streamers, and you know what they've always said? 6 months. If you actually can pay your bills up to 6 months, maybe even 8 months, that's when you know you're probably in the realm of doing what it is you need to do. But then not everybody's like, well, screw it. If I have an extra 100K in the bank, can I just do it also too? And it's like, well, look at your living conditions, especially now. The times have changed right now. You know what I mean? Like, I don't really want to get too political with the whole tariffs and stuff like that, but it's like, you have to understand inflation is going up. So what does that mean for us? We got to be very strategic with how we move around. You know what I mean? I can't just look at my family and friends and be like, "Oh yeah, I quit my job yesterday," and then start pursuing this full time. I have to set things up. It's like a Tetris board. You don't go from 1 to 25 all the way. You have to go through level 1, 2, 3, 4, 5, and such and such. You know what I mean?
Yeah, and I think you said it earlier, like what worked for people getting to a certain point isn't necessarily going to work for you. And I would highlight that, saying that, if you're already reading a blog article on how to start a podcast or how to do this type of YouTube video, it's already too late, guys. It's already too late. Whatever the thing that's going to go viral or going to be the next thing is going to be just this revolutionary like idea or topic, or a different way of translating it into the world. We were just like for example, me and my team we were talking about, as you caught me on the phone there, SBA loans are being constricted. I mean, they've been constricted for the last several years once the capital markets came down after 2022 and interest rates started to peak. And now, when you combo the whole ICE component to it too, um, unless you're a gold card recipient, you're not going to really be getting this financing. So what does that do? That opens the door for privatized lending, not going through SBA or banks, right? And that's just like a change that's happening that nobody's writing articles on it. And then how do you capture that, right? The answer would be privatized lending, right, for small business owners. But it's just, if you think that you're going to look at an idea out there that somebody else is being successful and recreate it, that's not going to happen. It needs to be something totally different. Unless it's
Speak
real
to it.
estate. And that's why I do real estate, because I'm an idiot and nothing is easier as real estate, because you just rent out a box to people and they stay in there. They don't not gonna, the saying goes, they're not gonna create more real estate. Everybody needs a place to stay, even though the quarters are getting smaller and smaller and smaller because people just sit and do nothing and don't really hang out with anybody and just put their Apple Vision Pros in the future and live in like 400 square foot apartments.
I
But
love that you say
that's
all of this.
but the problem is with real estate, you need freaking money to get started. It is a capital intensive business.
Let's speak to that because, all right, I do podcasting and I see a lot of people venturing into real estate. And I'm just like, is this something that's a trend? Like, did you all do because the way my brain works is like, did you research before you jumped into that? Because I get it, it's cool. You can make a lot of money very quickly if you know how to network, if you know how to build into your portfolio. I know that. But for yourself, like when you see it now, like speak to a day in the life of what you have to do and what you see. And like if there's any overcoming adversities that come with that.
Well, I mean, the biggest thing with real estate is, I mean, it's not as difficult as running a real business, to be honest. Again, it's an antiquated business process, right? You have a box, you get a loan on it, so you can buy the thing because it's a tremendous price, and you rent it out to other people or businesses. Very simple business. And And I think to your point, that's why people come to it because all the information out there, all the books typically point to real estate at some point. But make no mistake, it's not really the place for the guy who's broke to start. It's like once you've made money elsewhere, it's a great place to put money into real estate later. Right? I think that's the key thing. Um, like so successful business owners, once you get over $1 million revenue, and then you keep plugging away, and then you sell for 1 million or $5 million, then you diversify into real estate and of course other assets too, right? But that to me is the real process as opposed to just starting right in real estate. Although that's what I did, right? I started with just buying a rental property and going from there. But the way to create massive wealth is to make money elsewhere outside of real estate, then parlay that into real estate is more of a conservative long-term play. It's kind of the idea.
I love that you say that sports gambling reference parlay.
Yeah, but I'm not talking about like a lot of. I think what you're talking about, a lot of these guys will buy like little properties, renovate it, flip it. So that's super risky, guys. Super, super risky when you do it. Like when we'll buy an apartment, we'll just put a little lipstick on a pig, new flooring, new appliances, new paint jobs, some playground equipment outside, improve the management. But really, we're trying to just bump the rents up 10, 20%, something like that. But when you're buying a single family house and you're flipping it, you're putting in tremendous risks. You're working with contractors that aren't necessarily aligned with you. And, I think that's what people don't realize. But, I mean, I guess it's sexy and it makes for great videos. So, but I guess that's probably why they do it too.
Right? And I think that's like the nearsightedness where some folks are like, I can do that too. They just point, I can do that too. And it's like, not necessarily. Not necessarily. Okay, so let me ask you this because I like how where this conversation is going. I've kind of led into it with the overcoming adversity. Speak to a time for yourself. What did that look like? And how did you bounce back?
Well, I mean, I would say in the beginning stages, like I would buy rental properties in Seattle, and a lot of these places are just too expensive, right? But mainly the rent to value ratios don't work in these primary markets, like where you're at, Toronto, New York, Hawaii, Seattle, all of California, basically. The numbers just aren't going to work there. So we'll follow this thing called the rent to value ratio, where you take the monthly rents divided by the purchase price, and you're looking for something about a 1% or better to be able to cash flow. Seattle, you'd be lucky to find something 0.5%. It's just not going to work there. So I started investing back in 2009, bought a few units, and then I was like, well, I'm not cash flowing on this anymore because this was like 2012 when the market started to come up, which I do believe in 2025 today, we're kind of in that same market cycle for commercial real estate. Commercial real estate came down crashing 20, 30% couple of years ago. Um, Residential real estate's totally different. I don't follow it. To me, I think residential real estate's a little silly. I don't like to invest in it. But like I think right now is kind of that same part of the market cycle. But back in 2012, again, like you keep doing the same thing, expecting the same results. That's just not going to happen. I didn't really realize it back then, but the numbers didn't work. So I had to move elsewhere and go to buying properties in Birmingham, Atlanta, Indianapolis, places I've never been before, but just to hit my numbers out there. So, you talk about, adversity, like when things don't work, what do? Do you pout or do you find some other alternative solution? And that was kind of pivotal to my growth as an investor. You know, Stage one of investing is, invest in your backyard if the numbers make sense, but not many investors feel comfortable doing this stuff remotely.
That's brilliant. So now where you're at and you see like the current trajectory of the world, how hard is it now to navigate when you're looking at like buying and selling and flipping and things like that? Does that get a little tedious because of just the current like the current change in the world right now? Or is it just something you just kind of figure out as it goes?
I mean, we're not really affected by that stuff too much, right? Like that's why real estate's relatively easy. doesn't, I mean, yeah, maybe tariffs make some things get a little bit more expensive, but it doesn't really impact the real estate world as it does business owners, right? Like it's hugely monumental changes for
Hmm.
them.
Hmm.
And that's why, again, real estate for business owners is playing it on easy mode, where it could be a lot harder when you run a real business, when as opposed to just being a landlord. Now, I'm not talking about flipping homes because to me that's just reckless a little bit in a way. But I'm talking about buy and hold landlord stuff here. But you need money to do it. So pros and cons with everything, right?
So, Lane, let me ask you this question: how did it? Because I know what the audience are thinking right now as we're in recording. Where do I get the money from?
Shit, I don't know, man. Work a day job. I mean, I wrote my book, The Wealth Elevator. It's mainly for people who have decent jobs or already successful businesses. There's different floors to the wealth building journey. You might be in the basement floor. You make less than 50, 60 grand per year. You're in credit card debt. I'm not the guy to follow, guys. Like there's a gazillion of blogs out there, learn how to keep a budget, blah, 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 blah. Don't have a $6 latte. I don't teach that stuff. I work with people who have pretty decent money skills. Um, Maybe that's how your parents taught you and have a decent job. And then you can get going, right? Like I would say if you are able to save 5, 10 grand per year, that's kind of the stage where you kind of are able to now get on the wealth elevator journey and start buying rental properties and building a portfolio. But that was kind of what I sought to create. There's a gazillion books out there. There's Dave Ramsey, Susie Orman, all these basic personal finance guys out there. But to me, it was like, what do you do when you have some money and you're on step two, right? So I focus on a specific niche, just like anybody should do out there in their business. And I stick to a certain, I try to help that specific audience.
Speak to that wealth elevator a little bit more. Let's really unpack that. Like, how, for my when I hear that, how many levels, how many tiers do we start at with that?
Yeah, so basement level, sorry guys, I can't help you. Maybe pick up the book, read it, see what's on the first floor, second floor. But I think you got to go find a job. I mean, I'm not a huge fan of college myself. I mean, I went to a lot of college. Got a master's degree, bachelor's, but I'm not a huge fan of it. But that's how I got started, right? Got me a job. But um, you could start your own business. You can do a lot of things. Again, I'm not here to help people get traction. That's your guys' job. But once you do have traction and you're on the first floor of the wealth elevator, where I found myself graduating college, able to save 20, 30 grand per year, just buying rental, putting that into rental properties. Maybe when you get your net worth to 500,000 or your income is over $200,000 or a credit investor status, that puts you in the second floor of the wealth elevator where you're looking to get into more passive investments such as syndications and and private placements, mostly because of the legal liability. A lot of people in this floor net worth $1 million or greater, you have something to lose. So and when I passed this stage was maybe about 2015 when I had 11 rentals. We had like an eviction or two every year, some kind of big catastrophe that happened at one of these properties every quarter. Um, Never got sued, but like, it's just a matter of time, right? You have that many rental properties for something silly. And that was kind of, where I found all these other accredited investors out there. I didn't have any rich uncle. My parents didn't own rental properties, so I didn't really know that this world existed. So that was kind of, I had to kind of learn all this stuff on my own, and then I kind of realized put this all into the wealth elevator construct, and then beyond that, there's the third floor, there's the penthouse level, then you get to the family office level where, you have people walking around 100, $200 million net worth, and they're in the business of investing their money,
Hmm.
right? But I think it's important to be aware of these levels. But I think step one, figure out where you are at today and focus on the strategies in that particular floor,
Hmm.
right? Because you go on TikTok or whatever people do these days, you're getting all these random pieces of information, but when does that piece of information pertain to you?
That's the thing. That's I know we could probably riff on this a lot. You see the overconsumption of information that's out there, and there's nothing that really sticks. You do the research, you look at all this stuff, and you're just like, some people are just saying the same things, just different verbiage. You know what I mean? And it's like, where's the wholesomeness? Where's the deep dive? Like the wealth elevator. When I hear that, I'm like, there's an aha moment that turns on. I'm like, I'm gonna get the book because I may not be the type of person that wants to get into your line of work, but I'm like, how can I ideate that in now into other things in life? Because it can pertain to other things in life, no?
Yeah. I mean, like take something like the age old like argument. Should we buy a house to live in? Like, well, if you want to go by the numbers, you're going to make more money in investing, right? There's low risks associated with it, but that's if you don't risk it, no biscuit, as we all say. So for some people who have good money management skills, not buying a house and renting and parlaying that money into investments is much better way of going. That said, for most of the general public are really bad at saving their money and bad at, so they need a forced piggy bank. And that's what a house is, right? They pay their own mortgage, they put their own money in there, and then they can't get their grubby hands at it to buy something stupid. So for most people, buying a house to live in for that reason is probably the way to go. But you see, not the same advice fits everybody. This is very personal. This personal finance. It's fun to me, but everybody's a little bit different situation.
Mm-hmm. And what I like about you, you're real sharp. You're bang, 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 bang. So it's like as more I'm listening intent with intent. I'm like, there's a lot that I'm picking up. Even I'm like, okay, this is how does this correlate differently in a different lane of work? You know what I mean? Because it's like, see, play on words. Your first name, lane of work. You get what I just did there, right? But it's like so many times, and I see this, and that's the reason why it's like when you realize half of society, and I'm not trying to diss anybody here that's listening to the podcast, they think low level. You can't think low level. It's podcasts like this is what the work you're doing, the real work, the groundwork that you need to listen to and hear is this is where we came from, and we build up. Not the woo woo, you do this, you do that, try to be like the millionaires on Instagram and stuff like that. But it's like, this is what it's about. Here's the step by step process.
Yeah.
Use
I
the
mean, in most
elevator.
things, there's like what they say, there's three sides to a coin. There's the heads, the tails, and then there's the edge, right? I mean, there's always, but understanding the why you do one or the other thing, that's kind of where you start.
Hmm. You spoke about college, right? And maybe this could spin into schooling now. With all of the information that you've collected throughout the years, right? Why do you think the school systems don't focus on investing and saving money from your point of view?
Well, I'll give you the conspiracy theory is they don't want anybody to be financially free because then what kind of society would run like that if nobody had to build bridges or deliver babies and do stuff, trade time for money, right? But I think it's just at one time I had like a real negative sentiment towards education, right? Because that's what all investors do. Investors always think that way, but and business owners themselves too. But when you think about it, like not everybody's meant to be a leader, right? Like not everybody, like yeah, most people don't want to be in a leadership role. They just want to play their part, and I think that's why humans are kind of cool. Like we're kind of like ants. Like we like work well together. That's just how we are in society. We're like tribes or something like that at one time. So if you take that as kind of our natural state, like you know, the school is meant to teach the masses, those guys. So and how do you do that? Well, you create these degrees and these teachings to have people have technical skills for them to be resources, human resources into the greater cause. Um, Sometimes I focus on like, well, what do you do for those leaders, right? The minority of the people leading. I think that's nobody has really figured that one out yet. But you know, that said, I think society, with the school and everything, does a pretty good job at going after that goal. I mean, I could be worse. I is what I think. but
Hmm.
it creates people. You go to college, and you don't even use the damn thing. And if anything, I hire people. I'll be the first one to tell you that it doesn't matter what school they went, what degree they have. It's just their attitude and their mindset. But one thing that college does is it kind of when you're filtering all these people, at least it kind of sorts them at least from the start. And then, maybe this is an analogy some people can relate with. It's like online dating. You get to see it people, but it's just like, geez, they need to figure out some kind of sorting system with that thing, right? Like, because it's just like it's like, I mean, it's daunting and it's like a waste of time. And so if like, job givers are trying to find job seekers, if you didn't have this system, like at least people have some degrees, some don't, right? Like it's just a wasting of everybody's time. It's just a shit show, right? Like,
That's the
okay,
thing, right? It's scary because I know folks right now that they're doing other things in the back end. They want to learn, like there's so much free software out there. They want to learn how to maybe Excel spreadsheets. Should I go to school for finance? Why would you spend all of that just to learn that? You can go to YouTube right now, or you can go on Udemy and pay half the price and learn that and put it towards whatever you want to put it towards to. You know what I mean? And you
yeah,
don't see, it's like, do we really need to go to school? And that, even what you're saying, I'm like, well, it depends on what you're going to school for. If you're picking up like nursing, then yes, I can see that. Dental, okay, I can see that. But everything else, if people say, oh, I'm going to school for business, in my point of view, why?
yeah. But this, I think people need to understand, like, in everything, there is a game to it. You need to understand the game, whether you're trying to, you know, go into private equity, buy businesses, there is a game to that. There's players, there's rules, there's unspoken rules. Just like the silly college thing, getting a job, there is a game to this. And the game essentially is you need to get yourself past the gatekeepers and get yourself that first job where that you can then prove yourself. So even though you may not use any of this silly stuff, it helps you get through that first gate.
Love
I
what you
don't like
said.
it. I don't know how else they would do it though, right?
Right?
But
No,
it
I
is
like
what
that.
it is.
I like that. As you're looking at the current landscape, we're in April. So this is coming out end of April-ish at the time when folks are listening to this. What is what is the rest of 2025 looking like for you as far as your business? Is there anything that you're wanting to like conquer to go into 2026?
I mean, we just look for good, real estate deals or private equity businesses to buy. The For us, it's kind of business as usual. I think the tariffs thing, I mean, it's a little. I mean, I guess they try and dramatize it, right? The news try and make it like
Scare
into a
tactics.
war. Yeah. Um, I think it's. I think I mean, like anything else, it gets resolved. Um, I like to follow industry like publications such as like ITR Economics. Um, I don't follow news from YouTubers, Instagrammers, or whatever. Like, what the hell do they know? Um, I would say like, try and plug into industry newsletters, and they're all saying like they look at the forward-looking um, estimates on like industrial production. A lot of that points to like a second half 2025 of being very smooth and increasing. So from that, the tides are moving in the right direction. Interest rates are come down a little bit, but they're going to be staying elevated over 3-4% for maybe a decade. So that doesn't bode too well for real estate specifically. At least it's not going to spike, right? But if you guys want to know what, you know, sound cool in front of your friends and what the interest rates are, just go to the Chatham Financial Curve. Those are the rate cap providers, insurance companies that make predictions on this stuff, and they actually have skin in the game. So those are your best bets on where things are going to be at any time. They've been known to be wrong, of course, right? But that's your industry standard, um, what your predictions are. But I think that's kind of where like we like to focus on investments that going to be around for 10 years. Like, there's a long-term demand for like, like real estate, apartments. People need a place to live, especially the lower middle class. It's a demographic that's getting bigger. Um, the bifurcation of the rich and poor, unfortunately, like kind of plays into our investment thesis. And if you focus on investments like that, yeah, sure, there'll be market corrections here or there, but generally speaking, it kind of goes up, and that's where you want to be, as opposed to investing off some small niche that here today, gone tomorrow, or gone in like 6 months. I think that's the thing. Like if you're investing in something, ask yourself, is this something that's hot now, or is it going to be here 10, 20 years from now?
No, well said.
But
Where
those things
can
tend to be a little bit more expensive than $10,000. You know?
trust me? Listen, I've said this now, especially being over here in Toronto area. You you get in conversations all the time with friends, family. To live now as if you have a family, you got to be well, like especially in the current dynamic, you got to be well over. I'm gonna say 160 to about close to 200K, 220K. Like joint. That's like husband, wife, boyfriend, girlfriend, kid. If you ain't doing that, like you're just gonna skate by. You know what I mean? So it's like look at your tools. Look at are you living within your means? And sometimes it's like you mentioned, put the lattes down. Put those $6 cups of coffee at Starbucks down. I'm not dissing Starbucks, right? I don't drink it anymore, but it's just like put all that stuff down. Put the things that you feel like are just hold on, how do I say this? Put the things down that you know you're not using. There's so many folks that I know they've said is Rory, after really looking at my subscription services, I've cut them all down. I cut every single one of them down. And then you save that extra money because it's like that extra 120 that you're spending a year can go to something else. You know what I mean?
Yeah. I mean, cutting expenses, if it creates like five, $10,000 per year, that's great. Then put that into investments to then start to grow. It's not a get rich quick scheme for sure, but maybe in 5 years, doing that religiously can buy you a rental property that can put an extra few $100 a month into your pocket. And you know what's cool? Then that'll help you save for the next one a little bit faster, right? I mean, when I bought my first rental in 2009, it took me a few years to buy the next one. And then it took me like a year to buy the next, like it's a little bit faster every single time. But yeah, until you hit a certain point, it's like it's like watching grass grow.
For sure. For sure. Before we get out of here, plug all your information, right? Your podcast. You have 2 books out. Where can everyone get those? And yeah, where can everybody check out all the information that you provide?
Yeah, so if you are interested in, kind of learning what this framework is, and in the book we have like this little pull-out chart, like where you're at. You can go to Amazon, check out the Wealth Elevator on there. If you buy it and you give us a review, take a screenshot, you can send my team an email, team@thewealthelevator.com, and we'll hook you up with the PDF and the MP3 version. If you can't read, just joking.
This guy's just joking. I love how
That's a joke.
how dry you just
That's a
said
joke.
it.
I know you guys can read because that's why you're listening to a podcast.
Right, right. So
Uh,
and then go plug all the other information there.
that's it. Just one call to action.
Yeah,
That's the takeaway, guys. Watch the book.
yeah, for sure. Well, Lane, I appreciate you, man.
Yeah.
Keep doing your thing. Keep rocking. I'll keep watching you on the backside there, and LinkedIn and all that stuff, and just keep up the good work because it's folks like you we need to see and hear more of that helps ideate change in people's mind. Especially when it comes to money and finance and things like that.
Yeah. I mean, my hope is, maybe it's not as motivating, but maybe some people are like, well, shit, I'm just got to go back to my day job, suck it up, and save some money first.
Right. Best way to close out the show right there, my man. Appreciate you.
Yeah.